With the market trading sideways over the last couple of weeks, you're likely wondering if you have to expect more dumps or if the bull market finally continues, right? Well, here are my thoughts. What's up? My name is Caroline and this is Wealth in Progress, where you'll learn how to make passive income with cryptocurrencies. In this video, I'll give you a quick market update of BTC and the overall crypto market. I'll share my thoughts on the market development and I'll show you what to look out for to buy and sell. Now, if you want to take your crypto strategy to a whole new level and actually buy when whales are buying, aka at the bottom, then you need to join our free masterclass. This is where you'll learn how to use on-chain metrics that have made Kieran and me over $50,000 in profit. So if you're tired of missing the bottom, then go down in the description, click on the first link and sign up for our free masterclass. You'll then receive a personal invitation for the masterclass very soon. All right, let's dive in. Now, since BTC moves the whole market, we'll look at the BTC charts to start out with. We'll then also take a look at the global markets to see how this all correlates. So this is the BTC USD chart on the daily, and if we just zoom out here a bit, you see the whole market movement over the last couple of months, or basically 2 years. Now, what you see straight away is that we've had more or less a double top here. So we've had this top here and this top was almost at the same range. And what you can also see is that we've had this long correction phase here between May and July 2021. And then from there we traded upwards again towards that next high. Now, those lower sideways areas are basically called accumulation phases, because that means in this range, this is where whales accumulate. This is where everyone freaks out because it keeps dipping lower and you've got those really long wicks and retail investors freak out, and that's when whales scoop up your coins to then wait for a pushback higher where they can then sell on the top here again. Now, if we compare this range where we're now trading in right now to the last correction between May and July, you can see that it doesn't look exactly similar, but it does have some similarities. So for instance, in trades in a range, so let me just draw that quickly. Never mind my beautiful drawings, but you can see that these have basically been the ranges, and you can see that this is actually pretty similar width, so to say. But that's not the only thing that's important. You also have to look at the patterns. By the way, if you're not familiar with trading patterns or generally how to read charts, I'm in the middle of a chart reading course. I'm in the middle of publishing that, so links for that are in the description, so make sure to check those out first before you continue watching this video. So if we just keep looking at this range, or at those ranges, you can see that if we look at this range, this looks like the beginning of this range as well. And what you can also see is it looks like we're basically in the middle of that, or getting maybe towards the second third, but we're definitely not done with that range. So if we're simply looking at that, and if we're taking into account that history usually repeats itself, then it looks like it will take a couple more weeks of sideways action within that range before we can break higher again. Now, during the last correction, we've had a very nice descending wedge. I'll just quickly draw that again, and that was like towards the end, it was really clear that this is likely breaking towards the upside, because this is a bullish pattern. Again, you'll learn all of that in my chart reading course. And so the only thing you need to note is that you don't know when it will break out. So you didn't know if it will break out here or if it took a bit longer, but towards like the middle and the end, it was pretty clear that this will break to the upside. Now, it looks a bit different now, and I actually see two kind of patterns. One is more bearish than the other, and it's not clear which one will play out in the end. So let me just quickly draw both. One is a triangle. So one is a triangle, and in this case, this would mean that it would trade sideways within this range for a couple more days probably, and then it looks more or less like a symmetrical triangle. So this is, well, it's not clear in which direction it will break out, but generally speaking, if it comes from the upside and goes into the triangle, then it generally breaks out towards the downside again. So that's like medium bearish, I would say. The other pattern that I saw, let me just draw that as well. So the other pattern that I saw is an ascending wedge. And like we've had here with the descending wedge with that other line here, so it doesn't need to close here, it just basically needs to become narrower towards the end. So this is bullish, and that's why we broke out to the upside, and this is actually bearish, meaning the breakdown to the downside is likely to occur. So both of those patterns don't look like we're having a blow off top very soon. So what I think personally, if I'm looking at those charts, what I think will likely happen is we're trading in that range, either that triangle or the wedge, for a couple more days, probably weeks. And then we'll break to the downside and retest that 30,000 level. So this level here, I think we need to retest that again. And I'll show you a couple of other metrics that support this idea, so it will become clear in a minute. But this is the most probable scenario that I see, because honestly right now there just isn't enough fear in this market. And whales are looking for ultimate fear to really push the price lower and snag up a lot of BTC and other coins, and then they'll push the price higher again. Now, BTC generally moves the whole crypto market, but what's also very important to take into account is the whole stock market, the whole trading market in general. And the S&P 500 index, that's basically an index that shows you how the 500 most important stocks in the US are trading, and that generally shows you the worldwide sentiment of how stocks are doing at the moment. Now, what you can see is, this is the daily chart again, is that we've been in an upwards trend for the past year, I would say. So we've had that crash in March 2020. That was, for the past 2 years actually. That was the COVID crash, and then we've traded upwards since then. And we can actually just draw a trend line here. So you can see it has been going down to that trend line a couple of times, but it stayed up there for the last 2 years almost. And now that was mid-January, it broke through that trend line. And what usually happens is if a stock or a crypto breaks a trend line, then it's going to be really hard for that stock to break that again. So what is likely going to happen is, this is a trend reversal, and it will likely trade to the downside, and then at some point it will retest that trend line, but that will usually take a very long time, especially for indexes, because indexes don't trade very fast, because it's a combination of a lot of stocks, 500 stocks in that case. Now, of course, we're generally only looking at crypto, and we're not that interested in stocks, right? But to be honest, the stock market is just much bigger at crypto at this point, and it's not uncommon that the whole stock market actually moves the crypto market as well. The last example has been that March 2020 crash. That if we go back at BTC USD, you'll see that we've had that exact same crash happening there as well. It doesn't look that impressive here because we've traded much higher since then, but if we just zoom in a bit here, you'll see that it went from 10,000 to 3,000. So that was an insane crash, probably like 60-70% within a couple of days. So that just shows you that it's really important to take the overall global markets into account as well. And in fact, we found a pretty funny tweet here from Matt Huang. So he posted a couple of pretty poorly performing stocks, and funnily enough, they performed worse than a lot of shitcoins in the crypto market. So if we look at that, the top one is minus 93%, and even the best performing one in this list is minus 65%. So that's pretty insane if you're thinking about stocks that are usually much more stable than crypto. That's pretty crazy. Now, part of the reason of this crash, or of this breakdown down out of the trend line, is obviously the ongoing war between Russia and the Ukraine. Now, you might be thinking that this might be the main reason why the markets will tumble over the next couple of years. And yes, this is certainly possible. We found some very interesting historic data about how stocks reacted to war. If we compare the last really big wars of the last couple of decades, first of all, it's sad that we've had so many big wars. But if we're just looking at it from an investing standpoint, you can see that the biggest correction and the most fear is during the beginning of the war, which is now. So this had happened in the Vietnam War, Gulf War, Afghanistan War. Actually, it went higher after that, but then it tumbled lower. But that can also be due to other reasons. That was in 01 and 02. So that was the dot-com bubble as well. So there were a lot of other things going on as well. But then also for the Iraq War and Crimean War crisis, you can see that after that first dip that probably lasted for a month or two, the general stock market traded higher again. So while I think you need to have the S&P 500 and the general stock market in the back of your mind, you need to keep an eye on that. I don't think that this war will be the main reason why the stock market will completely crash. There might be other reasons, but just because of that, I don't think it will crash. I think it will have a strong correction, maybe for another couple of weeks. But then if there's nothing else that leads to a crash, I don't think this will be the main catalyst. And along with that, BTC doesn't always hyper correlate with the stock market. So even if we have a longer correction in the stock market, that can mean that BTC trades sideways, but then maybe it doesn't have the blow off top, but will trade upwards eventually again. But again, before we have a trend reversal in the crypto market, I think we're going sideways for a bit, then we'll retest that 30,000 level around there between 33 and 30,000, and then a trend reversal is likely, in my opinion. Now, to emphasize that point, or that what has emphasized my points, are two more metrics. One is the PL multiple and the other is the fear and greed index. So let's take a look at that quickly. So I've shared both metrics in another video. I'll leave that on top of my head so that you know the basics of what I'm talking about. So check those out first and then come back to this video. So let's just zoom in and let's take a look at the past 2 years. Now, generally, the best buying opportunities are in this green area. So if it goes below that green line, that's 0.5 actually of the PL multiple index. So if it dips below that, these are the best buying opportunities. And the last one was in June 2021. That doesn't mean it's the exact bottom. It's impossible to time the exact bottom, but this is a very good indicator for the bottom range. So for instance, if we look at June 26th, or in this range, in this area, that dipped down to 30,500, and the only point where it went a bit lower was here, where it went to 29,800. So you would have been super close. That would have been one of the best trades ever to buy BTC there. Now before that, the last time it happened was in May 2020, and then before that, obviously March 2020. That was the big March crash that I just talked about. So these are this is the ideal range to buy, but it doesn't necessarily need to dip that low. And if you look at the last correction here, it only dipped once and then it just stayed in this range. And if we look at the current correction, it didn't dip into the blue range yet. But generally speaking, a good point of reference to buy as well, that isn't the super low bottom but is a good range to start accumulating and start DCAing, is if it's below 1. So you can see here, about here, that's 1. You can see on the left here. And if it goes below that, that's generally a good idea to start accumulating. That's when whales start accumulating as well. But to be honest, I'm still expecting a dip into the green area. I feel like this correction just isn't done yet. We're trading in this low area below 1, but I feel like we just need one dip in there where all the whales are buying and placing their longs, and that is probably when it dips to 30,000. The other thing I want to look at is the fear and greed index. So you can see we're currently sitting at a 20, and that has been the case for the last couple of days or weeks even. So we've never been above 26. So we've been in that 20 range, and that says extreme fear, but the actual extreme fear is when it goes to about 10. So you can see that on this chart here. So if we look at the last year, you can see, so that was the last correction in May to July. It dipped to 10, 1, 2, 3, 4, 5 times, and then 1 to 14, once to 14, and once to 15. Now, if we look at the current correction, it only dipped to 10 about twice. And since then, it stayed pretty high. Sure, we're staying in that 20 range right now, but in between, it went up to 50. And to be honest, I feel like that's just not enough fear in the market, because whales are looking for very high fear that pushes the price lower, that leads to all the retail investors, all paper hands, selling their coins to the whales so that they can pick them up before the price moves higher again. And I feel like we just haven't seen enough of that yet. I would like to see a couple more tenors here, a couple more dips to 10. So I would say at least 2 more dips to 10 that would instill extreme fear, and then I feel like we're slowly getting ready for a move upwards again. So to wrap up, let me just quickly tell you what I'm doing. So I see this as an accumulation phase, because also on-chain metrics show me that whales are buying. Again, don't forget to subscribe to our free masterclass where you learn how to read and understand those metrics as well. So I see this as an accumulation phase, and what I did is I slowly started DCAing and getting back into the market during this last dip. So I'm looking for those dips, and that's where I'm slowly buying back in. But again, I'm expecting dips lower, at least 1 or 2, and I'm expecting a dip to 30,000. Now, there's no guarantee that this will happen. Maybe I'm wrong, you never know. But from the charts and from all those metrics that I'm looking at, this is the most likely scenario. So again, I'm slowly starting to buy, but I'm also still keeping a lot of stablecoins on the side for dips lower. But then if that doesn't happen, if we don't have that 30,000 retest again, then I'm fine because I bought back in, not a whole lot, but that's fine. And then if it dips lower, I can buy more. So in both scenarios, I'm set and I'm secured with both of my positions. And that's what I would generally recommend doing in such a scenario where we're trading sideways and it's not very clear in which direction it will go. If you like this video, hit the like button down below, share with your friends, and be sure to subscribe. Thanks for watching, and I'll see you in the next video. Bye!